Hey everybody, welcome in. My favorite time of the week, the IA Q&A, where we answer your questions, and it's video submission time. So we had over 60 submissions this week, and a big thank you to everybody on Patreon that submitted them. So as usual, math, money, and freedom, we try and address some of those problems so you guys can find enough financial resources to buy your time back. And disclaimer, this is edutainment, this is not financial advice. So first of all, I'm going to deviate here because I believe this is a historical moment. I mentioned in my video yesterday on the Miami summary. I was quite emotional because I thought this was a huge breakthrough. But what actually happened way ahead of time. So before we jump into that, first of all, congrats to the 10 new WholeCoiners. We are minting more than one every day within the Patreon community, and they're only the people that I know about. So congratulations. Now, when I talk about the geopolitical game theory and game theory for Bitcoin, and what I mean by that is I get a lot of questions. Basically, what El Salvador have done is they've triggered a move, and fingers crossed, the legislature will pass it. I know the legislature is under direct control of the president, so it looks highly likely. But when I talk about geopolitical game theory, what I mean is the first mover advantage is secured, okay? And Bitcoin's game theory is beautiful. El Salvador is the first domino to fall, and the old expression, gradually, then suddenly, that's where I believe we're at. I didn't expect this to happen for 2 to 5 years. It's already happened. So, well done, El Salvador. Amazing work. Now, cue the first question of the day.
Hi, James. Hey, quick question. How do we hedge against Bitcoin dropping? I don't want to sell and incur capital gains, so teach me how to hedge against the inevitable drop. Thank you, man. I appreciate your content. I'm listening and watching every day.
How do I hedge against Bitcoin dropping? From Phil. So there's a couple of ways that I like to do it. First of all, instead of doing what some people do is just sell at the top, it's very important to hold this pristine asset. So the two ways I would look at doing it would be, first of all, you hold your long, which means you retain your bags of Bitcoin, and you sell an out of the money or an at the money call option out for a certain period of time that you're looking to protect yourself against. That could be 3 to 6 months. In tomorrow's video, I'm going to talk about the Bitcoin death cross and how things happen in cycles. So it's kind of like a TA video. Again, answers more detailed questions that I've got a lot of regarding the Bitcoin death cross. So stay tuned for that. But to calculate your approximate scenario, you look at your option price and you subtract the Bitcoin price less the strike price over the Bitcoin price. And that gives you your approximate value. And you can play with different scenarios there. For example, the option price could be a $100,000 strike and the Bitcoin price could fall to whatever number you want and just plug in your numbers. The other alternative is to buy an in the money or at the money put. And there, the calculation is very simple. Strike price less Bitcoin price over Bitcoin price, and subtract out your option price. And that'll give you a good indication as to where you are. So that is the hedging of Bitcoin. I'm going to do a detailed video on that, but I think we have a long way to run in the bullish cycle. So I'm not doing it yet because I don't want to alarm people. Now, the corollary of that is also true. The Bitcoin bullish option plays, just to touch on them because they're an inverse to what I just covered. You could buy an in the money call or even at the money call, and the pricing would be Bitcoin price, like strike price, divided by Bitcoin price, less the option price. And sell an at the money or out of the money put. Put selling is what I do a lot with equities, and no reason that couldn't be done here. For example, sell a $35,000 put option for Bitcoin, going out about 3 months, you collect about $5,000 to $7,000. And that means either you get Bitcoin very cheap or you pocket the premium. So it's a very lucrative way to build a solid portfolio. So that's just a couple of ideas. Now, there are some cool calculators online. This is from Deribit, and you can check it out yourselves. But here you can plug in your numbers, whether you're going short or long, your position, your quantity, your entry price, and your supposed exit price as well. You get to see exactly how it plays out. So instead of running your own formula, you can use this online calculator too. So it's pretty cool. So Phil, thank you for the question. Now, second question, roll the video.
Hi, James. Quick question for you here. I just became a Bitcoin WholeCoiner, so very excited for that. I'm now looking to get to the level of 33 ETH that you recommend. My question for you is, would you continue to do dollar cost averaging, maybe 50-50 into both Bitcoin and ETH? Or now that you have a one whole Bitcoin, would you maybe go 80% ETH and then 20% Bitcoin? Thanks so much for all the content you provide. Have a great day.
So this is a very good question and tricky because As I always say to people, you always have to tap dance. With the markets, you never know what you're going to get. There's always risk involved. I have to stress that. Investing is not easy. There are hundreds of thousands of professional investors, and a large majority of them don't actually make it. And then there are millions and millions of retail investors. So please be aware that the investing game is always risky and dangerous. Now, on that note, which is a very interesting question that I ask myself every single day, is what should we do? Right now, I like to look at the Bitcoin versus Ethereum dominance. You can see that Bitcoin fell under 40% briefly. It's now at about 42%. And the Ethereum went above 20%, just fell under 20%. And I think it's about 19.5% now, and it's going to be back above 20% soon. So if you look at those two, they make up over 65% of the whole crypto market cap, which is phenomenal. Now, a week ago, I thought the Ethereum flippening was a sure thing. Now with the El Salvador news and the institutional buying, I am not so sure. So this is literally the moment I've been waiting for quite some time. I don't want to get people too excited, but the bullish news re El Salvador is a game changer. Still early days. We don't know if it's going to happen or not, but if it does and other dominoes fall, who knows? Russia could be accumulating Bitcoin as we speak, because we know Russia is setting up big mining organizations and they are de-dollarizing their whole funds internally as well. So either way, the future doesn't look good for the US dollar. But in terms of that, what I would actually do is I would stay 60-40, 60% Bitcoin, 40% Ethereum. And that's exactly what my ratios are at right now. And every time it falls out, I actually buy a little bit more Ethereum or a little bit more Bitcoin, because I believe that's a good way to play it. And again, that could be 50-50 next month. It could be back to my 15%, 85%. If I find something bad out about Ethereum, who knows? Either way, the safe bet, the blue chip, is Bitcoin. So cue the video for the next question.
Hello, I wanted to know if you see a trend of more people looking to be paid in crypto from their employers and employers wanting to pay their staff in crypto.
This is a cool question, and I always talk about everybody wants to be paid in Bitcoin. So first of all, let's look at the employees that want Bitcoin. We know some of the professional athletes, football players especially. I know there's NBA players that want to be paid now. You've got artists that want to be paid in Bitcoin. You got musicians, especially in the rap music scene, who want to be paid in crypto. You've got the City of Miami employees, some of them that elect for it. You've got innovative startups. You've got exchanges. You got miners. These are some of the people that want to be paid. Now, the question is, can employees be paid in their normal currency, with a designated portion of their wages being converted to a selected cryptocurrency and sent to their wallet, or in the full cryptocurrency itself? Now, the other side of that is the employers that want to pay in Bitcoin. So not many at this stage, unfortunately. They still don't know how to start, how to get an on-ramp, etc. But there is a new breed of employer that are looking to attract workers, distinguish themselves from other employers, and that they are an early tech adopter and have very compelling compensation. Also, a lot of tech recruiters in India are paying in crypto. Now, some of the names, you got NFL teams, you got Quadriga, Bitcoin Exchange, Blockchain.info, BitShares, Dana Crowdfunding, Fairlay, Mastercoin Foundation, SE5, Appcoin. They're just some of the names that are actually paying employees in Bitcoin right now today. So it's picking up, it's ramping up, it's going to become a standard in no time. So related to that question, Chica, there's another question from Enrique. Enrique, roll the tape.
Hey James, greetings from New York City. My question today is, I want to ask at my job to the human resources team if at some point they could consider paying us on Bitcoin. What are the implications that a company has to take to starting to do so?
It's not totally straightforward, but these are some of the things that I see from my side. So if you are talking to your employer, the key reasons is really, when employers do this today, is for talent acquisition by virtue signaling. But the employers, first of all, need an on-ramp. They don't even know where to begin. So you're going to have to help them with that. And there's lots of companies out there that you can check out to help. Second of all, employers need to determine terms. For example, what percentage will be crypto? 100%, 50%, 30%, who knows? Some of the football players, for example, get half-half. And things like withdrawing taxes and benefit charges still needs to be done. That's why it's good to have a portion maybe in US dollars or fiat currency. Now, the employee, what's very important here, may bear exchange risk. So for example, if you have a $200,000 salary, you want half paid in Bitcoin, and Bitcoin loses half its value, if it goes from say $64,000 to $35,000, you could be taking a 50% haircut on half of your salary. So this is where the employee actually bears some of the exchange risk. But we all know where the future is going for Bitcoin, so we'll see what happens. And what's also happening is kind of funny, is employers like WeWork have announced that they will start accepting Bitcoin in payment and Ether, and they're going to put it on the balance sheet, and maybe one day, they haven't indicated it yet, but they'll be paying their employees with crypto as well. So lots of cool things happen. There is one thing, though, I do want to know, and this is a famous case. Make sure you trust your employer. One employer paid an individual in Bitcoin, and it rose over 700% in value. Now he wants all the employees to return their crypto and take dollars instead. So this has become a very ugly situation. Obviously, the employer is upset he gave away so much crypto, or the commitment to pay so much in crypto, and now that crypto is worth so much more than they originally banked on. So bear that in mind. Make sure you trust your employer. Make sure if you do have such an arrangement in place, you immediately at the every 2 weeks or every month, or however frequently you get paid, make sure it's transferred directly into a wallet, or in some cases, people could also figure it out themselves. So that's that. So thank you so much for the question, Enrique. Next question is from Todd. Roll the tape.
When trading out of a position, why would it make sense to cash out into a stable coin as opposed to just cashing out into fiat?
Good question. And sometimes I cash out into stable coins for flexibility and speed and moving stuff around. So for example, stable coins are a great store of wealth. They do have, in some cases, very high yields, like 10% versus 0% on fiat. And the reason it's so high is because there's a heavy demand for people with Bitcoin and crypto to access cash without actually selling their crypto. That's why stablecoins are really in high demand right now. And that's why they're paying such high interest. But remember as well, when rates are high, it means there's also an underlying risk. So some of the common names I'm going to talk about, you got USDC, etc., Paxos, you see the list on the side there. But remember, there's a lot of concern now about Tether. And if anything does happen to Tether, the value of your stablecoin could go to zero. It's not like holding fiat. So there is risk. That's why you get 10%. So make sure you manage your risk. Pick the stablecoins that are safest. I actually like USDC now. I have had a little bit of Tether in the past, but I got out of that. So not alarming anybody, just be very, very careful. If you get 0% on fiat and 10% on a stablecoin, there's a reason why you're getting so much money on it. So, and thank you for the question. Next question is from Alex. Roll the tape.
Hello everyone, and greetings from Iceland. As a relatively new investor, I got most of my savings in cryptocurrencies. I really want to expand it to real estate, but not necessarily to my home country. How do you think the crypto market will affect the real estate market? Thanks in advance.
There's a whole bunch of stuff happening. Obviously, Alex, I think you all know about the world being tokenized, and one of the reasons I'm so bullish on DeFi. And I also am a very big real estate investor. So there's a couple of things that are going down right now. Obviously, real estate tokenization is an emerging trend, and it's happening very fast. It's already happened in big cities like New York City. And the convergence of real estate and blockchain is there, and there's a great use case for it. So tokenization really helps real estate owners raise capital more efficiently and fractionally. And it gives investors access to private real estate investments, transparency, and liquidity. And as I always say, the future is not only a gig economy, i.e. people doing work for select periods of time, but what I also say is everything is becoming fractionalized. People aren't buying houses anymore and staying in one house for the rest of their lives. People are looking to maybe have a quarter of their time in Lake Como in Italy, maybe half their time in Puerto Rico for tax reasons, and another quarter of the time in, I don't know, San Francisco, California, or Buenos Aires, Argentina, whatever the case may be. People are going to start being much more mobile, moving around, and they're going to need properties that they can book in for a specific period of time, maybe a quarter of the year or a month of the year, and that'll all be done through tokenization. So think of timeshares, think of Airbnb, but now on the blockchain and tokenized. And the beauty of it is, again, you've got that access to liquidity, not only access to properties, but access to buy them without any credit checks or control, as long as you hold the requisite Ethereum or whatever the case may be. And I actually covered this in another video up here, over there. And I spoke about DeFi and real estate and how it can be tokenized. So check that out. And also just Google search some of the offerings that are available today. It's a super exciting time. Alex from Iceland, thank you so much for your question. Next question, roll the tape from Tamara.
Hi, everybody. James, my question for you is kind of one of the silly ones. I'm just curious if you were a horse player. I hear you talk, and some of the terms that you use sound like terms that you might hear at a racetrack. Just wondering if you're a fan of the races.
So this is an interesting one. So first of all, my opinion of horse racing is I don't really like cruelty to animals. When I was a child, there were some stories of horses being kidnapped. Second of all, I like asymmetric bets, but horse racing is very different. Owners can bet against the horses. I learned this at a very young age. And there's other factors like bribes, drugs, tactics to influence the outcomes of races. So no, I don't. Never bet on a horse, never will. I don't trust it. And that goes for dogs and all the cruel sports like chicken fighting and those types of things. So no, I'm very, very against it. In fact, on that note, quick update on some of the contributions that have come in and our donations. So we are now sponsoring an elephant called Nicholas. And it's funny, we chose Nicholas because it's also my son's name. So Nicholas, if you're watching, we now have adopted a little elephant. And he's previously a circus animal and obviously was in danger. And now we are supporting Nicholas's life. And he's a young elephant too. I think he's only 12 years of age. And as you know, elephants live to 110, 120, 140 years of age. So it's part of the IA family. And there's more to come, lots more to come. So quick conclusion from today. Game theory is in play for Bitcoin. It's unbelievable. We are way ahead of schedule. I still believe there's some manipulation happening with the markets. I can't believe the price is still at this level, but incredibly strong support at 35K. I have not lost hope, and you shouldn't either. I do believe the big money centers are trying to shake your crypto free, and it's working because I'm seeing people lose faith every single day. People are absolutely getting very upset with the fact that Bitcoin hasn't moved, especially those that bought at the top. Just hold on tight. Dollar cost averaging if you can. People need to ramp up on hedging. I will have updated videos on how you can hedge and protect yourselves against crypto downside when the time comes, not just yet. And everybody wants to get paid in Bitcoin. Yep, everybody. So, and I know I'm on the receiving end of that as well. And I believe markets are still being manipulated in order to skew things. And the world is becoming tokenized, not only for tangibles, but also intangibles. So super interesting time. So big thank you to everyone on Patreon as well. Hope you like the content. Hit the like, subscribe, and do what you need to do. Thanks all. Bye.